find out where we're at with regards to the recapitalization of banks. First City Monument Bank, or FCMB, their shareholders have voted in favour of resolutions to allow the bank to acquire 100% of Finbank Plc. The deal is 6 billion naira's worth that will not only allow the two banks to exist as one business entity in the next year, but will also complete the recapitalization of Finbank. Wole Famurewa has more, and he's standing by in our studios on the merger.
Yeah, thanks a lot, Lerato. Well, with the September 30th deadline looming tomorrow, like you mentioned, FCMB shareholders have approved the deal for them to buy 100% stake in Finbank. Joining me in the studio to take a look at that deal, and of course the broader transactions which we've seen over the last week, and of course which will end with Union Bank tomorrow, is Abiola Rasaq, a banking analyst at Vetiva Capital. Thanks a lot, Abiola, for joining us on the show today.
Thank you.
First of all, let's take a look at the deal structure. It sounds like the general theme for these, obviously because we're dealing with rescued banks here, there's very little choice for these banks, and it seems that they're all coming at very good prices. 6 billion naira for 180 branches or so, 200 billion in deposits. It certainly looks like a good deal for FCMB.
Yeah, I think FCMB has actually got a very good price, just like their peers, the likes of Access Bank and likewise the ETI. But one key thing for us is not just the acquisition price, which for me is like the first order condition in an M&A. You've got a good price, but what's the execution?
Right.
Now, if they get the execution right, I think it's actually going to be a very good deal for them going forward. Not only for the fact that they're getting at a very cheap price, but for me, I think there are two key issues. One has to do with the capital deployment of FCMB. You agree with me that they have a very huge capital base, a capital adequacy of something close like 30% as we speak. Right. So it gives them the room to actually deploy their capital going forward. And you know, FCMB has actually been known to be a corporate and merchant bank franchise business. And going forward, I think with the acquisition of Finbank, they're actually going to have that ability to penetrate the retail market, which has been their challenge over the last 2-3 years. I think for them, it's going to be like buying a retail bank to actually complement your corporate and merchant bank franchise. But like I said, the most important thing is the execution. How well they do the execution is actually what's going to define the value to the shareholders in future, particularly over the next 2 to 3 years, which for me, I think is what we'll have to watch closely, the execution risk.
But let's take a look at this, move for retail banking. We've seen, like you mentioned, quite a few banks, Access Bank, Sterling Bank, making that play for a broader retail platform to approach the Nigerian market. And of course, the middle market is, rather the middle class is growing in Nigeria. We know that. But there's still some concern as to, aren't too many banks going into the same strategy? Will it work for everybody? Yeah,
you see, it's not a function of whether it's going to work for everybody or not. Definitely, everybody cannot be winners. But the most important thing is what's the retail offerings that these people are proposing to the market.
Right.
If the Nigerian banks are still doing retail banking the way it's been done over the last 5 years, I think we're not going to achieve so much. But I think they've actually learned their lessons. A number of them are actually coming up with new retail offerings. And of course, with the level of savvy and with the deployment of technology that we're beginning to see going forward now, that we will likely see going forward, I think they're actually going to get it right. One key thing is to become more innovative in terms of retail offerings. Once you're innovative, once you know what the market wants, because currently now most of the retail products in the market are not actually meant for the retail customers. They're actually meant for the high premium customers. Now, once you can get what the customers actually want and what they can actually buy from you, then that's the first step. I think some banks are actually getting that right now, and I just hope that the adoption of those products in the market will actually be as much as we expected. I think the opportunities are still very much there. The level of penetration of the banking industry is still very low. You still have close, like just about 35% of the Nigerian population being banked. You still have a significant volume of money outside the circulation, something close like 68% currently as we speak, meaning that there's much room for both deposit as well as for credit creation going forward. And I think that's one key thing that banks are actually going after now. And as I use that, even the big banks would definitely want to play the retail market because that's where the opportunity lies in the future.
Okay.
You're talking of not only in terms of the opportunity, in terms of deposits, but talking of in terms of even the yield on the credit granted to those to that segment of the market, because we're talking of a high yield.
Okay, you've clearly spelled out the investment case for retail banking, but there's also the issue of timing. And I'll pose to you the question that I posed to the head of strategy at Sterling Bank when I spoke to him yesterday: the timing of these deals, and given the fact that we have a global crisis, or should I say, possible recession looming in the horizon right now, and of course the impact that will have on oil prices and how that filters through to the Nigerian economy. Is this a good time to be doing deals?
Yeah, I get your point clearly, and which has to do with the timing. But one key thing is this is the time the opportunity has presented itself. You know, issue of acquisition in some cases may be a strategic move, in which case the acquirer would definitely want to have an acquisition, and you then find the right timing to actually do that. The next thing has to do with the circumstances surrounding the acquisition that we are currently seeing in the market now. Don't forget, just like you said earlier, that September 30, which is tomorrow, is actually the deadline. Now, if you don't do this deal now, then the next thing for you is to actually wait for the next 2 to 3 years, either to buy from Hong Kong, one of these nationalized entities. But if you don't actually want to wait, because over the next 2 years, you see a different banking sector landscape. And for some players, they actually need to actually grow their business, both organically and inorganically, for them to actually compete in that market favorably going forward. And if you don't do it now that the opportunity presents itself, you may not actually have this opportunity again, because for me, I think it's a rare situation. But like I said, the one key thing is what's going to be the execution strategy. And another thing is they've got the price right, the execution strategy, and what's the synergy that you see between those banks that are actually merging together. Access Bank, Intercontinental, what's the synergy? What's synergy between FCMB and Finbank? What synergy do we see between EcoBank Nigeria and, of course, Oceanic Bank? In as much as those synergies are actually there and you get the right execution strategy, then I think the issue of the timing would be something of less significant risk, so to say.
All right, let's leave it there. Thank you so much, Abiola, for joining us. Very well said. Abiola Rasaq, an analyst at Vetiva Capital Management, giving us his thoughts on the Finbank deal. And, of course, the flurry of deals that we're seeing in Nigeria is back to you, Lorato.